Bala's joining us this morning. Bala, good to have you with us. Always to help us understand better some of the key developments. AB Sun Life has halted fresh inflows into two funds. Bala, is this on any account of some kind of concerns that speculators may enter the schemes, take advantage of recovery in bad debt? Is it to perhaps prevent any kind of contagion impact?
No, in fact, we have actually stopped the inflows, keeping in mind the interest of existing investors who have been with the fund. And this fund, of course, had to take some kind of hit in the past because of some credited investment that we had in few of the entities. As a result of that, the mark-to-market impact had its NAV the last 1 year. And on those investments become actually are progressing well with respect to the final resolutions, and the recovery prospects have been, of course, increasing. In one of the assets, in fact, which is being valued at certain valuation, they have become current and servicing being done, both in interest and principal payment. But of course, they have to get upgraded, and the valuation of impact of that also is yet to come. In this scenario, what do you do? Either be greedy and get more money into the schemes, or you stop the inflows so that the existing investors who are staying in the fund, they become the beneficiary of such write-backs when it happens in the schemes for a period of next few months. And this is the progress in which we have been doing it. We discussed and debated about this, and they said, I think instead of gunning for more AUM to be raised in this category, it's better to actually stop these inflows and give the benefit to the investors who are actually staying in the fund. There's absolutely no concern. I think there's no concerns, and then those who, of course, want to have a redemption, they can continue. It's only the subscriptions where we didn't want to have, because a lot of people are also watching it, and smart investors would like to, of course, increase their allocations, given the fact they know very well that inflows, the reversal of NAV happens, they will also get to benefit. Therefore, this is a call we have taken in the interest of investors.
Right. Fair enough. Bala, what's your outlook, overall, for these funds going forward? You've said it's to protect the current investors and, so to maximize, of course, their gains from this. What is the kind of outlook you have on these two funds going forward?
No, outlook, of course, is it's positive, because anyway, fixed income as an asset category, it is a good asset class to be a part of the investor allocation into the mutual fund. And while one may perceive that one goes through a tough time right now because of the credit aversion in general is there in the market, in the financial market, including banks have been quite averse to risk. At the same time, one should also look at the risk at a price, and risk cannot be completely avoided as long as it comes at a price, as long as it comes as an yield. And definitely today is a scenario where one can actually pursue growing this size, and given a choice, we could have done that path, because today the assets are available and you can invest in your yield at your terms. At the same time, you can generate return for investors. But having said that, we need to do a balancing of both business opportunities, whether you want to let go, and the trust of investors, or other things one need to do. So therefore, our belief is, as this settles down in the next, say, few months, in general for the credit market, we will probably see this fund category would again come back. At the end of the day, the long-run fixed income schemes does really well, given the fact which I commonly keep saying all the time. Sometimes it may be seen as a repetition, that the NAV of the moment largely is driven by the interest accrual that happens in the portfolio, and the mark-to-market is something which I think is the incidental keeps happening, depending upon interest rate move as RBI does it. And credit, even whenever it happens, NAV of course will keep fluctuating. That fluctuation should not make investors get worried about that is my money is safe or not safe in fixed income schemes. And given the fact the large component of the NAV movement is coming from interest accrual, which ultimately protects the investors in the long run who are staying invested. No doubt the return could be below your satisfactory level, but not necessarily it can be so volatile as we normally see in equity, where we saw a moment. Those kind of things generally do not occur in this. And therefore, as a category, we as a fund house quite committed to build this as a category. But again, one need to take a trade-off as we have done as of yesterday.
Is there a problem with this entire category that is, I think, is getting exposed after the Franklin episode and given what's happening to the bond market? I mean, this in a sense, Bala, 2 years ago, 1.5 years ago, was the go-to category. Mutual funds were lending. They were lending quite, I don't want to use the word freely, but they were lending quite aggressively to corporates. Now that liquidity has reversed, I guess people have been trapped.
Yes, I think good observation, Nikunj. Just look at the beauty of the sad part of the bond market. There's one side, this huge amount of money, trillions of dollars, close to about 7,50,000 crores, is getting deployed in RBI window at 3.75%. And hopefully RBI comes with some announcement on these lines today when governor speaks at 10 o'clock in the morning. At the same time, the AAA public sector bonds rate yields have come down. At the same time, the real needy borrowers who have a long-term track record, of course, no doubt the rating could be a little lower. And second is they could also get impacted because of COVID-related economic impact. But it doesn't mean one can write off such investment opportunities. And ultimately, it's all about it's about how many people are sitting on the fence with risk aversion, and how many are actually start lending in so that the rotation begins. I think I am a firm believer in the bond market. Rotation of money is extremely important, irrespective of whatever the view one may have. As long as the rotation of money starts coming back, and believe me, Indian market is actually the market where low-rated bonds can get developed big time. That is a market which I think US has got, one of the biggest markets. Unless we fix this source of financing for Indian companies, ultimately it will have an impact in the Indian economy in terms of financing various projects through a good mix of debt and equity.
Sure. All right, Bala, fantastic. Thanks so much for joining us this morning and talking us through that decision. Let's also go across to Ajay on the other